Hello, welcome back to Core Finance. I'm Matt Brown, joined by Connor Campbell, financial analyst at Spreadex, and we're going to look at the FTSE as one guest called it today the tortoise. There's a lot of hares out there, but this certainly is the tortoise in comparison to other indices. It's come back off. Is this down to the strength of the pound, or again just people just bored of the FTSE and looking elsewhere?
I think it's a bit of everything. You know, the pound did come back a bit last week. That has obviously weighed on the FTSE. I think, as we were talking last week, I don't think that trade of stronger pound, weaker FTSE, weaker pound, stronger FTSE has completely gone yet. And maybe it's lost that sort of direct correlation, and that really you can sort of guarantee the opposite directions of both. I don't think it's quite as strong as it was earlier in the year, but I think that still is in play. So the pound bouncing back last week has dragged it lower. Then you've also got stuff like the retail sector situation that's not good at the moment, and I imagine that's only going to become more pronounced heading into Christmas. And then in January, that could mean the FTSE doesn't have a particularly great January, because I can't see many retail stocks having a good time of it over the Christmas period, especially since they're going to be hit with some fairly tough comparatives as well, compared to even just last year. You know, a decent Christmas compared to this sort of consumer squeeze Christmas. The figures could see some pretty nasty like-for-like drops, and that's only going to weigh on the FTSE. In terms of the budget on Wednesday, you know, obviously who knows what's going to be in it for the FTSE. I guess it seems like house builders might be an area where the FTSE might find a bit of good news. They seem like Hammond, you know, on the Sunday news programmes and things like that, seems quite committed to the housing sector, pumping a bit more money. I think, you know, upping it to 300,000 new houses built a year. You know, so the FTSE is not insignificant. The housing sector could then, you know, send it a bit higher on Wednesday. But again, then you shift away from the budget on Thursday. You've got the UK GDP figure. That's likely going to cause the pound more movement than the FTSE. So then again, you sort of do then end up with what is the pound doing, and then what does the FTSE do? I think that relationship does hamper it a bit, because it's always waiting on someone else. It can never build up its own head of momentum, because it's seen so strongly as tied with the pound. I don't really know where it goes. Our client has been buying around the 7.3, 7.5 mark. You know, not with enough sort of robustness to suggest it's going to mount a serious challenge above 7,400, but perhaps enough to suggest that it won't. You know, we saw it flirt with 7,350 yesterday. We've seen enough clients buying to maybe suggest it won't fall too far below that level. But like I said, it struggled with that 7,400 mark in the past. Obviously, in the last few weeks, it saw, you know, it climbed higher, but it's back to levels that it's sort of stagnated around in the past, in the last few months.
And from a client point of view, I assume that when they see it sub 7,400, around that level, they're looking at maybe 7,500, 7,550, and not thinking 8,000.
No,
in a
yeah,
month.
exactly.
I mean, is that the mentality?
Maybe
of the
there's enough good news to see it eke out sort of equivocal all-time highs rather than burst through. Yeah. Whereas if you compare it to even, you know, the DAX, which has had a few tough weeks, that, you know, all of a sudden, that then suddenly gets a burst of energy and zooms through to all-time highs. And the Dow, which, even though, you know, sort of the dominant story around the Dow Jones has been, you know, all the worries about the Republican tax plan and things like that, it's still not very far off its all-time highs. And that can do 200 points in a matter of moments, really. Whereas the FTSE just, in the last few months, has not had that ability to, you know, at most it grinds out like a 20 or 30 point rise. Or even then, if you look when, you know, the rather substantial climb it saw in the aftermath of the Bank of England rate hike, it lost that as quick as it got it, really. I just don't think there's the appetite to keep it at those all-time highs, or the data behind it, or the company reporting behind it to justify it zooming past those all-time highs. So I do think it is a case of, you know, or, you know, 7,500 is the dream, and I think that's maybe what clients are aiming for when they're buying around these current lows.
Good stuff. Well, slow and steady wins the race, maybe eventually, but it's going to take a long time to get there. In the meantime, Connor Campbell, thank you for joining us.